we are running through some of these previews, but I wanted your take on Tata Motors. As we speak, that's been the biggest gain of the last 30, 40 minutes or so. There's some news with regards to some tax cuts in China, which could potentially be good news. But at around 420 odd, what would your call be on the stock, given the kind of tailwinds that we have, low input costs, China tax cuts, turnaround of JLR? Go ahead.
Afternoon, Nigel. No, I think so. There are a lot of positives for Tata Motors, as you rightly pointed out. I think the latest that we are hearing is the China stimulus. And Tata Motors gets almost 28-30% of its JLR sales from the Chinese markets. So such a stimulus coming through, I think the prop up in demand, specifically on the JLR suite, I think that augurs well for Tata Motors. The second element that we are hearing all automakers, in fact, globally as well, when we listen to calls for Ford, etc. I think the semiconductor issue, Nigel, is expected to be largely behind by the second half as supplies start coming through. And demand footfalls have been extremely, extremely strong. So I think JLR numbers, expectations in terms of cost pressures going down, the accelerated R&D investments that they're probably doing on the EV portfolio, that should start getting spread out in the next few quarters. And I think the Indian business is holding out very, very strongly as well. So as per the O'Neill lens, the stock definitely needs to gain some price strength. But anybody holding on to the stock can hold on because there are a lot of tailwinds for the stock itself.
Okay. Dinesh, any thoughts on BPCL or any other oil marketing company?
No, so more or less in terms of what the consensus, as Sonal was mentioning. But Anuj, two things are happening with oil marketing companies. I think one, the premise in terms of how the divestment probably goes through, I think that would have given a leg up to the remaining two players as well. But with that probably being put on hold, I think the entire perspective in terms of whether these companies can be divested, I think becomes a huge question mark. The second element also becomes how sustainable are the GRMs. Obviously, I think what you're probably seeing in terms of crude prices at this point of time, the product cracks have moved up significantly. So Singapore GRMs are higher consistently over the past few weeks. But I think with the feedstock availability that they've probably got and with the downstream operations, obviously there's a lot of sum of parts for oil market, all OMC companies as well, Anuj. So I think it's the core refining business that might do well if Singapore GRMs probably stay the way they are. The second element obviously is the downstream or the marketing products also for these companies as well. If crude stays higher, I think the expectation of downstream products being a little bit on the higher side augurs well for them. And the investments that they probably have in other companies, obviously with a 20-25% holding company discount, I think that augurs well in terms of the overall SOTP. However, I think with what has happened in terms of the entire divestment process and expectations of numbers, actually, because of the under-recoveries that we've seen, the cut probably helps them. But to a large extent, I think it still remains subdued in terms of the O'Neill lens. So I think we stay a little bit away from OMC companies, very frankly, on the investment.
Okay, all right, Mayuresh, hang on. Well, there's one more company that will be reporting its numbers tomorrow. That's Coal India. On the top line, we're working with the growth of close to 13.5%. The EBITDA number will jump up by far more, by close to around 23%. Given that the EBITDA number growth is more than the top line growth, that would mean margin expansion to the tune of around 200 basis points. The profit number we're working with is around 5,400 crores. What are the factors that play? 13.5% top line. Well, bulk of that will be coming in from higher volume growth. The remainder, that's 4% odd, will be on the back of higher prices, particularly e-auction prices. The volumes, they've got a boost because of strong demand on ground. And also, international prices had spiked up. So high amount of domestic usage is what we have seen. The EBITDA number, that gets a leg up because e-auction prices have gone through the roof. And that's something that will really support these numbers. Operating leverage will play out given that volumes are up by close to 9%. And also there'll be some part of wage provisioning that we should be watching out for. What do we track from the numbers? Well, what are the targets they're going to be giving for the next year, both on operational numbers, that's dispatches as well as production, any kind of movement in terms of receivables, inventory levels as well. The long-awaited FSA price hike. Remember, FSA sales account for nearly around 85% of their total sales mix, so that's going to be awaited. And part of that will be offset by wage price hike. So, both those two factors should go hand in hand. How much of price increases they're taking? How much will the wage cost go up as well? Well, Mayuresh, these numbers tomorrow, it should be a good quarter for the company. Receivables have come down as well. Profitability has improved. The street ignored it for long at around 180 rupees. How do you view the stock?
No, it's reasonably placed, Nigel, and this entire story of renewables, I think thermal still remains in focus at least for the next few years. Having said that, I think the FY23 targets that the management mentioned in their last con call, both in terms of production and dispatches, close to 700 metric tons. What they're expecting to see in terms of margin performance as well, close to that 22% mark. Yes, there will be a blip because of the wage hikes that they'll probably take, but the annualized number is expected to be close to 22%. Now, in the past quarter, they have reported an EBITDA per ton of almost 393 rupees, if I'm not mistaken again. But I think roughly the expectation is that they should be able to maintain that range between 380 and 400 odd. As you rightly pointed out, I think the e-auction numbers and the realizations thereof, past quarter, it was close to that 1950 rupees per ton. But again, I think if that probably stays on the higher side and with more dispatches expected here, the overall consolidated bottom line and earnings growth should be reasonable, along with the dividend yield of 9.5%. So large expectation is that anybody holding on to the stock and clearly hold on to the stock like.
Okay, all right.